Welcome to the last lesson in the budgeting series on bank reconciliation. Even if you are not an accounting wizard for your small business, and frankly, who is? Every small business owner has to learn one or two basic accounting skills. After building, using, and analyzing your business budget, there is still one more vital step. What's the number one accounting skill that you probably didn't know how to do before you started your business? Bank reconciliation. Look, I didn't know how to do this when I started my business. I first learned about bank reconciliation from my accountant. As I was about to send him my business numbers at the end of my first year in business, he said to make sure I had done all my bank reconciliation first. I was like, what is that? I thought, that sounded really complicated. It's not. Bank reconciliation is really an easy double-check process to make sure you're accurately recording all of your business transactions per month. It's kind of like taking attendance at school. Are all your transactions here? Is anyone missing? Is everybody here and accounted for? And that's it. Bank reconciliation will help you find any of your revenues or costs missing in your business's electronic records. Bank reconciliation is the key first step to making sure your financial records are complete. Complete records help you pay the right amount of taxes and not a penny more, accurately track your business. Third, talk to investors or lenders about your business, which may be important if you want to grow. Here's how you do bank reconciliation. At the end of every month, your bank creates a monthly statement of your business account. When you look at your statement, either it came in the mail or you're looking at it online, you'll notice your bank statement always shows you four things. First thing, a starting bank balance. Second thing, any transaction that brought money into your account during the month. These are your deposits. The third thing it will show is any money that left your account during the month. These could be checks or ATM withdrawals or transfers. And then the fourth thing is an ending amount, your ending bank balance. So to do bank reconciliation, you'll first need to have recorded in a spreadsheet or accounting software every single transaction your business made for the past month. If you have cash transactions, these still get recorded electronically in your business records, probably in a cash account, even if you didn't make a deposit in the bank at the end of the day. If you use accounting software, and by the way, you should look for a button that says Bank Reconciliation. The first time you do this, your software prompts you to enter your starting bank balance and the date. Next, you enter your ending bank balance as shown on your bank statement and the last day of the month on your statement. Now that you have a starting amount and an ending amount for the month in your software, you use your bank statement to check that every transaction that went through your bank is also saved accurately in your accounting software. Your accounting software will show all the month's deposits into your bank account in a list and all of the withdrawals from your bank account in another list. For each transaction on your monthly bank statement, you then find and check off that transaction in your software. So, when you see the check you wrote for the $75 phone bill in your statement, you mark that in your software. When you see the $200 you withdrew from the ATM for petty cash, you mark that in your software. When you come to the $400 deposit into your bank account for the sale you made, you find that and you mark it in your software. You're probably getting the idea by now. If all the transactions in your monthly bank statement are recorded correctly in your software, at the end of the list, the bank reconciliation will show a 0 at the bottom. The 0 means you've done it right. The 0 is your happy place. If anything is missing, or if anything got recorded slightly wrong, even by a penny, you won't see the 0 at the bottom. That means you're either missing a deposit or a withdrawal, or you recorded the numbers slightly wrong. It's not a big deal. You just go back and you redo it. Let me tell you a few benefits of bank reconciliation. Number one, you get to see all the transactions that you've done over the course of the month. Many times that I've done bank reconciliation for my own business, I've noticed I forgot to record an expense or a sale in my accounting records. Missing those things in my accounting software can hurt my business. If I miss an expense, for example, I'll end up paying too much in taxes. If I've not recorded a revenue, then I don't have a full picture of my customers and their importance to my business. Second good reason to do bank reconciliation is checking your bank's costs and charges to you. Sometimes we only notice our business's bank charges us if we go through every single transaction each month and match it into our software. Bank reconciliation forces you to notice the $25 here or the $150 there of the bank charges that might have been sort of zipped right out of your checking account. Believe me, it happens. And number 3, preparing your records for your business accountant is so much easier after you've done bank reconciliation. It's really not your accountant's job to do this for you. Frankly, for most of us with a small business, it would be too complicated and too expensive for an outsider to do your own bank reconciliation. Unless you have a dedicated finance specialist at your firm, you, as the small business owner, need to learn this simple accounting skill. With accurate electronic records, bank reconciliation should take you just a short while at the start of every month. You will save money, you'll be certain of accurate records, and you're going to take charge of your business's future. Congratulations, you have completed the last lesson in budgeting. To test what you have learned, click on the link at the end of this video or the link that says Quiz Me under the Budgeting tab.